Hey everybody, so in today's video, I just wanted to talk about GAAP earnings per share versus adjusted earnings per share. Now, just a heads up, this video is not going to be as friendly, and it will definitely help me out if you leave me a comment just telling me how you kind of felt about this concept so I could get a better understanding of where you all sit with this. So the first thing I'm going to do is I'm going to look up Ford Motors earnings per share on macrotrends.com. So now when I go look at the quarterly, I'm going to see some very big red flags to me that definitely encourage me to go look into a company's quarterly filings. So right here, I can see in the last 2 quarters, there's major discrepancies. So here we went from 45 cents to literally $3.05 of earnings per share in 1 quarter. So the first thing that I think of is, well, what the heck happened here? How did we have this major jump right here? What in the world happened? And then from here, how in the world did we go negative? So, when you look at this, it really makes you scratch your head and you think, okay, what's going on here? Maybe I can't really use these earnings per share numbers. Maybe they're not reliable. So what I'm going to do is I'm going to go jump into their financial statements. So here, if I go on the Ford investor page, I can go into the SEC filings and I could look up quarter 4 and quarter 1. So the first thing I'm going to do is look up quarter 4. Now, Q4 is always tied in with the company's 10Q. So, or 10K is what I meant to say. So what I'm going to do is I'm going to look at their 10K for 2021. And this will include Q4 information. So from here, got this nice little page right here. I'm just going to scroll down a little bit. I want to go to the table of contents. So on this table of contents, I want to look up consolidated income statements. And it tells me right here, it is on page 110. So now they give me 3 years of information. So now I can kind of look, where is the major discrepancy that is causing that massive earnings per share? So I'm just going to kind of go through every single line item here. So nothing big there or there. All right, so I think I found it. It's right here. So as you can see, it's on the other income / loss, comma, net, and then it says note 5 and note 22. So other income / loss basically means income that's not directly tied to the business. So now what I'm going to do is I'm going to look up note 5. So we're going to go right here. We're going to type in note 5. All right, so this takes me right back to table of contents for the notes. And I can see note 5 is other income / loss. It's on page 123. So I'm going to go ahead and click on that. Now I'm going to kind of look through this. So let's see, where is the major discrepancy? So we can see right here, it is on the net periodic pension and OPEB. And OPBE is going to stand for, let me see right here, other post-employment benefits / cost excluding service costs. So now we see a pretty big number right there for that. And another big discrepancy is going to show up right here. So realized and unrealized gains / losses on cash equivalents, marketable securities, and other investments. So now the next thing that I want to do from here is I'm going to want to go look at the company's reconciliations. So when you see a big discrepancy like that, what you're usually going to see is a company is going to do a reconciliation on their earnings per share, and they're going to adjust it to how they see fit. So this is going to be non-GAAP. So unfortunately, when I look it up like this, I kind of got to look through all these different segments here. So I'm essentially going to press enter until I find what I'm looking for. All right, so we found it right here. Earnings/loss per share reconciliation to adjusted earnings/loss per share. So you can see that for 2021, they have an adjusted earnings per share diluted of $1.59. Now let me go over here to macro trends. So macro trends was telling me for 2021, we had the trailing 12-month earnings per share of $4.45 following GAAP. So if we're looking, the adjusted amount is much, much different. So we could kind of look into this a little bit. So when I look here, I'm just going to go through the individual line items. So let's see. When they do adjust this, what they're doing is they're taking out, so you can see they're getting our diluted after-tax results that are following GAAP. And what they're doing is they are subtracting this line item right here. And this is 11.507 billion. So this is a pretty massive adjustment right here. So what we can see here is impact of pre-tax and tax special items. Well, now we're going to say, okay, what the hell is tax special items? So now we could do some more investigative work. We could look up tax special items. And then let's see. Okay, so now they give us a little definition. And I'm going to zoom in for you guys. Effective with the reporting of our fourth quarter 2021 results, pre-tax special items now include gain and losses on investments in equity securities. For the full year, we recorded $9.6 billion of pre-tax special items, primarily reflecting gains on our equity investments in Rivian in connection with Rivian's initial public offering and market-to-market valuation adjustments during the year, as well as remeasurement gains associated with our global pension and OPEB plans. The gains were partially offset by costs associated with the global redesign actions and a debt extinguishment premium associated with the repurchase and redemption of $7.6 billion in our higher coupon debt. So basically they told us here that a lot of these gains came from just their equity investments in Rivian and as well as their remeasurement gains associated with their global pension and OPEB plans. So now we kind of have an understanding of where this massive GAAP amount came from. So now we could go look at quarter one. So quarter one, we could go look in the SEC filings and we could just click this right ahead. But I already have it up here. So I could just go directly to page 1 and we could do the same thing for quarter 1. So for Q1, we could go look up the consolidated income statements, which is going to be on page 2. And then we could look for some big discrepancies here. So we're going to go line by line. All right. So what I can see right here is also other income is causing this massive discrepancy. So this right here is almost like a 5 billion discrepancy. So now they say note 4 and note 17. So I'm going to go ahead and look up note 4. Now note 4 is other income / losses, which is on page 8. We're going to go on page 8 right here. And then let's see. So on page 8, we can kind of see where the massive discrepancy is. So right here, right away, we can see this. So this is like a $454 million discrepancy right here. And it says realized and unrealized gains / losses on cash equivalents, marketable securities, and other investments. So now I could go ahead and do the same thing, and I could look up their reconciliation. All right, so now they show our earnings per share reconciliation to adjusted earnings per share. So what we can see is that GAAP showed us negative 78 cents. But then after we did all the adjustments, we got 38 cents. So it literally went from deep negative to positive. So this is definitely something very important that we need to pay attention to, because if we're simply just going off GAAP, then we might miss some very important things. Sometimes a lot of these expenses that are other income or losses, they're not directly related to a regular business cycle. So sometimes we want to take these out and make these adjustments. So now when we actually look at the adjustments here, we can see the same exact thing, less impact of pre-tax and tax special items, but it says less here, and then it shows parentheses. So what we're actually doing is we're adding 4,674. Keep in mind that this is in millions, so this is actually billions. So that's 4.67. That is 4,674,000,000. Sorry about that. So basically, our adjusted went from deep negative to positive, as we can see here, and we can look up tax special items again. All right, so when we look at tax special items, we can see right here that the biggest discrepancy is right here. So market-to-market gain / loss on Rivian investment. This accounted for about 4.45 billion-ish. And then we could go back and we could look at the reconciliations. And when we look at the reconciliations right here, this number is 4674. And then I can try and replicate that number again. 4674 is the number we're looking for. So the way that they went ahead and calculated that is they got this subtotal other items, 5808. And then from this number, they subtracted the provisions for benefits. So we're going to do minus 1192 equals, and then they went ahead and added the subtotal global redesign, which is 58. And just like that, we have our 4674. So now another interesting thing that I like to do is I like to go on the earnings press release, and then we're going to go on earnings press release for Q1 of 2022. And then let's see, right here, directly on the first page, it says company posted 34.5 billion in revenue, net loss of 3.1 billion, primarily attributed to valuation of investment in Rivian. All right, so now you guys can kind of see how I'm going through these financial statements and what I'm looking at when I'm looking at adjusted earnings per share versus GAAP earnings per share. Now, I hope this video was very helpful to you guys. And remember to leave me a comment and just tell me how you felt about this. So thanks very much, and enjoy your day.